Okay, good morning, good afternoon, good evening, depending on where you are connecting to us from. It's a pleasure having you here. If you can hear me loud and clear, do type in the chat section that the audio is good to go from your end. I repeat, do type in the chat section that the audio is good to go from your end, and we can proceed. Right, so I want to say thank you for joining us. It's another beautiful day, and of course, we are here to look for trading opportunities in the market and see how we can make some pips. Yes, and see how we can make some pips. It's all about the pips at the end of the day, right? So I need your confirmation, first of all, that the audio is good to go, and also let us know where you are connecting to us from, right? It will indeed be a pleasure for us to know where you are, as this platform Trading Live, right, connects us from different parts of the world. I am in Canada, in British Columbia to be precise, and the time here is 6 a.m. I'm in PST time, so it will be good for us to know where others are connecting to us from, right? So I'm just going to wait for your feedbacks on that, and then we can forward ahead nicely. And for those that are just joining us, you're welcome. We are going to be discussing the weekly market analysis. We're going to be looking at the market for trading opportunities, right? So that's what we're going to be doing now, the market analysis. And we can do this from different perspectives, whether you're a scalper, whether you are a day trader, swing or position trader, right? Based on your own trading preference, because we have different type of traders at the end of the day. So quickly, my name is Tolu Olatunji, and I happen to be a trader, an analyst, and a coach. I have been trading for over a decade now. I always say at the very beginning, for a few years, I was doing more or less nonsense. Yes, I didn't know what I was doing until I started to put pieces together, like you are trying to solve a puzzle. And then I got better, and I've been privileged to work for a few brokers in Nigeria. When I was still living in Nigeria then, I worked for Forex Time, and I also worked for Hot Forex, and they have rebranded to HFM now, right? So I've been in the business for a little while, and I've seen my fair share of ups and downs. But at the end of the day, I always tell traders, do not give up. Even with all the losses that you might be experiencing now, do not give up. There will be light at the end of the tunnel as long as you follow procedures, right? And what do I mean by procedures? As long as you follow things like having a trading plan, right? If you were with us yesterday, we talked about the trading plan, the importance of a trading plan for successful trading. The trading plan that will cover your instruments, that will cover your risk, that will cover the time frame that you are using, that will cover the type of trader that you are, and a few other things as such, right? And that's what we discussed yesterday, right? Trading plan, very key, very, very important. If you were not with us yesterday, I would encourage you to head on to the YouTube channel, right? I have a YouTube channel at CSA Forex. All right, the name of my academy, I run an academy, is known as CSA Forex. You can head over to my YouTube channel, the video is there. And also on this Trading Live platform, the recording is also there as well. So anyone that you prefer. So also don't forget, we are thanking Trading Live for this platform to be able to meet up and then discuss the business. The first chart we have in front of us is the Euro USD. But before we dive in and discuss this Euro USD, there's something we always ensure that we discuss initially, right? There's something we always ensure that we discuss first of all, and that is what? That is what? That is the fundamentals. We always ensure that we look at the fundamentals first of all. The fundamentals based on the charts, based on news, is what we're going to look at first of all before we discuss this chart. Because it's always paramount that we understand what could affect the markets before we enter the market, right? And if you look at the calendar now, this calendar is brought to you by Forex Factory. You have different places where you can get all of these calendars from. We're looking at Forex Factory for the calendar for the week. This is the calendar for the week. You can see Sunday, Monday, which was yesterday, And today is the 2nd of May, and it's still a new month. So I would easily say happy new month to everybody here, right? So today is May 2nd, Tuesday. And as we're talking about the news, as we're talking about the fundamentals, we always say that there is this very key news that usually comes out at the beginning, the first Friday of every new month. I repeat, that normally comes out every first Friday of every new month. And if you are aware, that happens to be the NFP. The NFP is the acronym for non-farm payroll, which has to do with the unemployment rate for the US. And as we always state, that the US dollar is the most traded currency in the entire world. So we like to pay attention to the US dollar because it's a driving factor, it's a driving force for the rest of all the majors. When we say majors, the major currency pairs such as Euro USD, Pound USD, Australian dollar USD, the USD Switzerland francs, even the gold, right? The dollar also has a direct movement to gold, right? So when you pay attention to the USD, it's going to help us to understand much better how the market should behave and when it should behave, because the news is a guide for us to know when there's going to be volatility in the market, when the market is going to react in a very, very aggressive manner. And that aggressive manner is one that we need to pay attention to, and that's why we're looking at the calendar. And you can see over here, we have all the different times from today where the news is going to be coming out. Now, by the way, all of this time that you have in front of you is based on UK time, right? For UK time, that's the London session UK time. The next news that we have coming out is 3 p.m. UK time. Remember I said I'm in BC, I'm in British Columbia, and now it's just a little bit over 6 a.m. That means that for me, the news coming out for the US dollar is at about 7 a.m. And if somebody in the EST, Eastern time, that should be about 10 a.m. So get used to your time zones looking at this calendar. And one thing you could do, you can click here where you have the time. You can see where I'm setting. Where you have the time, you can click on it, and then you can adjust it to your time zone. So the next news is for the US dollar. And if you look over here under impact, under the impact over here, they are all red at the end of the day. This red, we filtered it to give us only the high impact news, because this is the high impact news that will cause serious movements in the market. I repeat, it is the high impact news that will cause serious movements in the market. So based on this high impact news that we are talking about here, the next one is for 3 p.m. the USD, and that's the Job openings. So by 3 p.m., we're going to have some data over here. So to be advisable by 3 p.m., not now, by 3 p.m., we refresh this page and then we'll wait for the outcome to drop, right? You can see we refreshed it, I've refreshed it again. As you can see loading, you can see it's loaded, but nothing because it is until 3 p.m. that this news will be released. So we should have some volatility for the US dollar. And then later on by 11:45 p.m., just before midnight UK time, we have news coming out for the New Zealand dollar, unemployment rate, and trust me, unemployment rate news is always very, very of high impact. There's some certain news that we need to be aware of, the likes of the non-farm payroll, which is unemployment rate as well. Also, the likes of the CPI. We have the CPI coming out on Friday for the Switzerland francs by 7:30 a.m. for the Switzerland francs. You can see that this week is heavy. When I say heavy, it is heavy. Also, another key data, another key news that traders need to be aware of is the FOMC, the Federal Open Market Committee, right, where they'll be looking into the interest rate. Right, we're also going to talk about the news that came out not too long ago, earlier this morning, for the Australian dollar, for their rate statement, the interest rate. You can see we had this value here, 3.85, right? Now, a very fast way to interpret the news when it comes out, because you wait for the news to come out over here, you have some figures over here. The very fast way to interpret it is based on the color of the news. You can see this news over here is green, 3.85%. The color is green. When you have the color being green, then it means it is a buy, right? When you have the color being green, then it means it is a buy. And of course, when the color is red, which is the opposite, then it means it is a sell. Red is a sell, And then when it is black, black is neutral. I repeat, black is neutral. So it's also good for us to have an understanding of the color, because it's going to help us to know how to interpret the news. So when you say you are buying or you're selling this one, you know you need to pair it with another what? You need to pair it with another currency. So for this AUD that we have over here that said we should be buying the AUD, right, much earlier today, I'm going to show you how this looks like when you pair it with the USD. Remember we said we are looking at USD number one. So for the major currency pairs, you are pairing the USD against every other major currency. So AUD USD, we're going to be looking at it. And if you think about it, AUD USD, for this news that came out for AUD, it is going to be a buy much earlier today. And we're going to look at that shortly, because now we're going to cross over to the technical side of the business. You have the fundamentals and then you have the technicals. The fundamentals has to do with news. The fundamentals has to do with news, right? The fundamentals has to do with news, while the technicals has to do with the charts. While the technicals has to do with charts. So crossing over to the technical, let's do that now, and let's look at our charts right in front of us. I'm going to explain what we should be looking out for over here. Well, first of all, this is Euro USD. Let me quickly show you the AUD USD over here based on buying the AUD USD much earlier when that news came out. So if you look at the news over here, right, you can obviously see that this was the candle. This was the candle that set off that news. So you can see big candles on the chart. Whenever, I repeat, whenever you have big candles like this, right, nobody needs to tell you that was most likely based on news that came out. When you see massive candles like this, like the AUD that came out much earlier today, was a strong buy for AUD, a strong buy based on the unemployment rates. The unemployment rate, obviously, it's all about the interest rate where, or rather, sorry, the interest rate where they're trying to hike the rates to curb the rising inflation. And this has been a thing for the central banks since last year, especially. So you will see all of this on your charts. That's why they always say that seeing is believing. I repeat, they say that seeing is believing. So as you can see what we have right in front of us, right, this is very, very important. And as we can see, it's now a thing of what do we make out of this? This is AUD USD. I can see from the massive push higher where it got to these areas over here. As you can see, it got to these areas in front of us. Got to these areas here where you have a form of supply and supply, right? We always talk about supply. We always talk about demand, supply and demand in our trading, because it's a big factor. It's actually what moves the market. What moves the market is supply and demand. Once you understand the areas of supply and demand, it will now help you to know where to position yourself. I repeat, once you understand the supply and demand areas, it will now help you to know where to enter the market and also where to exit the market. Very, very key, very, very important at the end of the day, right? So this is one that we have right in front of us for the AUD USD, and this news was brought about by much earlier today. But then we always say pay attention to the dollar. This is the dollar over here. Pay attention to the USD, to the DXY, depending on the platform that you're using. You can see it as the USD index. It's an index. You can use it as the DXY, whatever the case might be. So over here, this is the DXY on this platform on the broker. I remember yesterday someone was asking about the broker. And if you want to know more about brokers, the broker to use, broker of choice and all, then no worries whatsoever. You can always reach out to me. I'll give you my handles later so you can reach out and then we can have a discussion on brokers or have any discussion on any aspect of the business, right? So if you carefully look at what we have in front of us, if you look at what we have in front of us, you should be able to see what? You should be able to see this area here, because based on supply and demand, when you have price pushing higher in this manner, right? When you have price pushing higher in this manner, it tends to create these areas here of demand, these areas here of demand. And this area here of demand is where we're expecting that price should come back to. So we're expecting price to come back to this area here of demand, where we get our price action for trigger and entry. And then we enter here. When you enter, your stop loss should be lower. And of course, your take profit can be here. With the expectation of price getting to that highs, right? The briefest highs, and then even breaking out of it, right? So when you're looking at the market, you look at the market based on the trends, how the price is moving, the direction. So that's simply what price action is all about. When you say price action, you can substitute that for price direction, or price trend, or price movement. So looking at how price is moving, how the price is trending, how the direction of price is so far, you see clearly that the dollar is appreciating. The dollar is getting stronger. So this week so far, today is Tuesday, don't forget, and we have news coming out by 3 p.m. For news coming out for 3 p.m., that also gives us an idea what we're expecting. So because the dollar is appreciating up till now, this week so far, we're looking forward to buying. And as we're looking forward to buying, based on the technicals, because you also need to merge the fundamentals. They say that two good heads are better than one. So when you combine the fundamentals and technicals together, it gives you that added advantage. So from here, I would like the price on this dollar to retrace, to pull back to this area here. And so we mark this area here as a form of demand. We are looking for entry to buy, and then we look for entry to buy to take it back up, right, in this manner, right? So if we look at it in this way for the US dollar, that means that for the Euro USD, because we want to buy the dollar, right? So we're waiting for the news coming out at 3 p.m. UK time. That is approximately 43 minutes from now, right? So what we're going to be doing now is what? We are going to be looking for the Euro USD, because Euro USD will give us the opposite of this USD. So for the Euro USD, right, for the Euro USD, we should be looking forward to what? We should be looking forward to selling. We should be looking forward to selling the Euro USD. So we're going to switch this chart from the dollar to the Euro USD now and see what we have. This is the Euro USD beside it. So as we're looking forward to selling, this is what we have here. So you can see this is an area here of supply. We have another area of supply. You can see supply as it keeps on moving lower, because we're looking at with the expectation of price moving in this manner, moving in this manner, moving in this manner, and then continue to go down. So this is the area of supply. This is the area of supply over here, where we're looking forward to price retracing, and then we get our entry here, stop loss above, and we can also see if hopefully the price can get to these lows. This happens to be the lows from much earlier, right? And that's from I believe this was last week or 2 weeks ago. This should be 2 weeks ago. So if we can get an entry here, right? If we can get an entry here, that will be very good, with a stop loss just above. We take profit here, then this will be a fantastic one. This will be a good one. And the risk to reward ratio on this trade would actually be a fantastic one as well. So this is one that we need to pay attention to. We need to focus on. And once you do this, once you have a look at this, right? Once you have a look at this, then it should give us, the plan. We always say you must have a trading plan. It should give us a plan of what we are expecting in the market. So you must always have your plan. And I always like to say ART, A-R-T, the area of interest. That's A. Then R for the reaction. We will look at the reaction. Here is the area that we're looking for interest. That's the interest to enter. Here's the area of interest. But then we're waiting for the reaction. I like to wait for the reaction. I don't like to set a penny order here, because we would have this massive candles. You can see we have a few big candles, plus size candles on the chart over here. So that means that the same thing can also happen over here. You can see this big plus size candle. You can have a plus size candle that's coming, approaching this area of supply. And then the big candles that are caused by the news comes out and you have a big candle that smashes through. If that happens, then you know that it is more or less heading over to the next area of supply over here. But then you setting a penny order over here, it means that your penny order has been triggered and you have been knocked out of that trade very fast. So I like to wait for the reaction. So traders set penny orders. It's up to you, depending on how you see the market and how it's working for you. There are 1,000,001 ways to trade, and there is no best strategy out there. All strategies are good because, truth be told, strategies will work and then they will fail. No strategy is 100%, right? So I like to wait for reaction, and from that reaction is now where we should get our trigger, because it's the reaction that could easily give us the likes of the pin bars. You have the pin bars, also known as hammers, or it could give us the likes of the engulfings in this area, which is bearish engulfing, since we're looking forward to selling. And when it comes to bearish means selling. And in an uptrend, when you hear bullish means buying. So you must understand these terms. I'm sure some of us understand the terms as well. Don't forget to introduce yourself. Let us also know where you are connecting to us from. Very key, very important for us to be aware of, right? So now moving on, this is the Euro USD that we have talked about at length, and we're waiting for the news at 3 p.m. for further directional bias. Yes, let's put it that way. We're waiting for the news at 3 p.m. for further directional bias on what we should be expecting. But based on the technicals, this is what we're looking out for. Let's see whether the fundamentals are aligned. Because one thing I can always tell you is that as we have traders that are trading using only the fundamentals, I think that is actually wrong, because the fundamentals, you will not be able to see exactly where to enter. The fundamentals could just give you like a sort of bias with respect to the direction. When the news comes out, it could be buy that currency or sell that currency. It's more or less giving you only a bias. But the technical gives you more than a bias. The technical gives you the area of entry. And then, truth be told, I'm sure you guys have seen this kind of scenario before, where the fundamentals gives you a bias, and then maybe you're supposed to be selling the Euro USD, but as you're supposed to be selling the Euro USD at the point where the news comes out, you have it first of all doing what? You have it first of all going up, right? And if you are wondering, but I thought it said sell. Yes, it will say sell, but don't forget, where are you supposed to sell? Where? So this technicals, it gives you that, it answers that question of where to enter, the location. And that location has to do with the supply, the demand, the support, the resistance. Supply, demand, support, resistance, they are very similar, but slightly different as well. We've talked about this from time to time, and then, we always try to explain the difference between the two. But then also, we need to always remind you that this is a market analysis session where we're looking at the charts and we're trying to get some opportunities like this one that we have here on the Euro USD. So I'm waiting for the Euro USD price to get there, and then I get my entry. Please kindly note, as a quick disclaimer, I repeat, as a quick disclaimer, our session is strictly for educational purposes, but should not be used as a form of signal. This business carries a high level of risk as it's a leverage market. So that means that in as much as you want to make money, you can also, on the flip side, you can lose money. There are traders that are crashing their account on a regular, right? I want to believe, even based on the AED news that came out earlier today, somewhere out there in the world, traders have crashed their account. So we need to understand all of these things with respect to trading. I repeat, we need to understand all of these things as a disclaimer. So this should be for strictly educational purposes. So once you join our sessions, not just today, you've been joining in the past and you continue to join them under the Trading Live platform, then it will now help us to understand much better, right, how to look at the market from our own eyes, from your own eyes. Because at the end of the day, it is all about giving you that ability to catch fish, showing you how to catch fish, and then you can catch fish on your own, and not providing fish for you. Provide fish for you, it lasts you for that day. But once you know how to catch the fish, then of course you can conduct your analysis like this, and then you can also place your trades yourself. And that is what Trading Live has done for us. The platform Trading Live has done for us, has given us that opportunity to learn from ourselves. There are also other facilitators under the Trading Live platform. I recommend that you check them out as well, right? So once you have that knowledge of how to trade, and you can now trade yourself. So this is what we have for the Euro USD. So we'll wait to see what the news outcome will be much later in the day. And then also as we proceed, right? Also as we proceed, we take note of other instruments as well. This is the pound JPY, what we are seeing over here. There's no need for the pound, there's no need for the JPY, but this is the chart over here, the technicals, right? And you can see for the technicals, this GBP JPY is an uptrend, is a bullish trend, because from the left-hand side, where the market started from on this chart, to where it is now, if you decide to connect these two circles together from here to here, you can see that this arrow is pointing upward. So this is clearly an uptrend. And for this uptrend, we're looking forward to buying, right? And if you want to buy, you should be looking forward to be buying at these areas of demand. The way it is now is a good one for us to enter. You can see the reaction. You can see there's a reaction over here. If you look very well, price is reacting to this area here. What now remains is the trigger. You must look for that trigger, right? Like the candles that we mentioned over here. Once you find those candles here, you can now hit the trigger, and then you what the market with your expectation based on your analysis go up. The market could still go down, by the way, the market could go down. And that's why we always say in this business, there is no strategy that is 100%. You still have losses. But then you must ensure that the winners that you have, you allow them to run, right? And then as they run, they take care of the losers, because the higher the reward based on the risk, it will take care of the losses that you've had initially. And that's why we always say, when you are trading, make sure that your final piece of the puzzle is the risk to reward ratio. Once the risk to reward ratio is well balanced, I repeat, once the risk to reward ratio is well balanced, then you can place that trade, because just a few winners, I repeat, just a few winners will easily take care of what? Will easily take care of the losers that you have, right? And this is a very important, very key way to look at the business. So now, with that said, we're going to talk about a few instruments, and if no question arises from those that might be here, then no issues, we would round up and then call it a day. And you can always watch this recording, right? Because you have access to the recording. You can watch the recording later. You can see this area is a fine, beautiful area that acted as resistance in the past. But then based on this big candle, you can see when you have big candles, you know that something was all based on news. So last week, we must have had news for pound or JPY. You can see the instruments is, the currency pair is pound against the Japanese yen. You can see you had this big candle that broke out of this area and then pushed higher. So this area could also be one that we could see in the future. It could be today, tomorrow, who knows, or next week, where it should be tested and support with potential for buying to take it higher. But so far, so good. It is untested. It is more of untested as a demand, as a support area. So Bitcoin is also one that we pay attention to. As we know, the crypto space came like, shockwave, and then people have been into the cryptos now heavily. But unfortunately, people that are into the cryptos, I'm sorry to say, a lot of them do not understand, or they do not understand the market. They just jumped in, and that's why you had a lot of people had issues last year from the likes of Luna, when Luna crashed, even FTX, and a whole lot of other things that have been happening in the past as well. Also based on Elon Musk for his Tesla purchasing about $15 billion worth of Bitcoin. I think that was sometime last year. Was it last year, February, if I'm not mistaken? And then what happened, them pulling out and the reaction to the Bitcoin. So this Bitcoin is a very, very volatile instrument as a crypto. You can see the size of this big, massive candle. Imagine if you were buying on this big candle and then you didn't use stop loss, only to sleep and wake up and you have this kind of massive candle that does damage to your account. You can see we have some massive candle sizes over here, but nothing compared to this one, right, from last week. And trust me, this one was heavy. But at the same time, you can also protect your account by using stop loss. Make sure you have stop loss on your chart, visible stop loss. And you can also protect your account by using what we call proper risk management. You must ensure that your risk management is in good standing order, to the fact that even when you have a loss, it doesn't dent your account too much. Because we have traders now that they have stop loss that is hit, and they're using poor risk management, and then it wipes out a big chunk of the account, right? It wipes out a big chunk of the account, right? So that should be taken care of. So this is the Bitcoin in front of us, and for this Bitcoin, I would love to see if price will get back to the supply, right? You can see we have a demand here, which it got shy of. So price now is stuck between this supply here and then this demand. But I prefer the price to get to this supply because of the flow. This is the flow for this week, right? The flow for this new week, you can see it is more or less to the downside. So I like to see a pullback, a retracement to this point here, and then we look for sell opportunities to take it to this area of demand, and you can take out your profit, or you can see if to break out of here and then drop some more. Because at the end of the day, levels can hold and levels can fail. It all depends on the reaction, as we always say, and it depends if there's news around the corner. This week, don't forget, this week is filled with heavy, high impact news that will cause serious volatility in the market. And when we talk about serious volatility, things that could occur in the market, you can say I'm stressing in the market, because what we're doing is trading the market, right? So the brokers are just middle people, middle persons are allowing you to conduct your transactions through. You are trading the markets. You're trading against other participants. You're trading against other retail traders like yourself. Or if you are in the institution, you're trading against institutional traders like the banks, hedge funds, and so on, right? But you need to understand the market. And that's why this week in the market, it is filled with high impact news that is going to cause volatility, that's going to cause some serious movement here and there. So we need to pay attention to the market at the end of the day, right? So with that said, this is the Bitcoin and what we're looking out for the Bitcoin. Let's look at a few more instruments, and if no question, we call it a day. This is the Bitcoin on the daily time frame as well, because you need to understand what's happening on the higher time frames. On the daily time frame, you have this area of demand, as you can see, demand, and it is yet to get there again to test here as demand. So that means that we still have some little room to the downside. And if you look over here, we also did something here where you can see a sort of wedge. You can see this is a wedge over here. So the wedge, if it's going to bounce, it's going to bounce in this area of demand. There's still some room to the downside. And that's why from the hourly time frame that we're looking at, we said something. We said there's demand lower, you remember, but then we said there is a supply area somewhere here on the hourly time frame. So like the price to pull back to a bit, still within this wedge, still within this triangle. Give us our entry inside here, and then we take it down nicely. If we take it down nicely, we could, conduct a sort of trade management where you could do a partial close over here and see whether it will break down some more to around the 25K area. If you look very well, this is some areas of resistance over here, some areas of resistance that the price should come back to maybe test as support. Who knows? But it was former resistance, and then now if it gets there, might act as support. So if you enter around the 28K marker that we have looked at from the hourly time frame, that's why it's always good if you are combining time frames for them to be aligned. If they are aligned, then it's good to go. But this one is stuck in the middle, and you're waiting for demand here. And you're waiting for demand on the hourly, it's telling you sell. You can take the opportunity, put in your stop loss, put in your proper risk management, lot size, volume calculation, and then you are good to go. These are things that we need to be looking at in the market and see how it progresses. So this is the big one from the daily time frame. High time frames are always very good. We just talked about the AUD not too long ago, based on this massive candle from the news that came out earlier today, right, for the Australian dollar. And that news was based on their rate statement, where there was an expectation of 3.6, but it ended at 3.85, which is 25 basis points, additional 25 basis points. And that saw the Aussie, the Australian dollar, being extremely bullish. And don't forget, we have the one for the New Zealand dollar coming out later this night. One thing about the Australian dollar and the New Zealand dollar is like they are more or less brothers and sisters. They tend to move in similar patterns, in similar ways, right? So when you're looking at the charts, you're looking at AUD/USD as a major currency pair. You can also pay attention to the NZD/USD as well. Both of them could be aligned, and it will give you some entries. And we always say when it comes to correlations as well, For Euro USD, if Euro USD is pushing higher, you should expect the USD chart to push lower. I repeat, you should expect the USD chart to push lower. In this instance, if you remember, we said for this Euro USD, we're expecting the market to pull back up here, and then we get an entry to sell to take it back down. The same also applies for the USD chart, where we're expecting the price to drop, pull back, retrace up to this point, and then push higher. You can see it is the opposite that we're looking out for on the USD over here. So you need to ensure, I repeat, you need to ensure that you are paying attention to your chart, making sure you can use correlations like we mentioned earlier, even for correlations like the dollar, because the dollar is more or less king, right? Notwithstanding what's happening with the BRICS, that is Brazil, Russia, India, China, and South Africa, with other countries trying to join the BRICS, where they're trying to make the Chinese yuan as the top currency to be traded based on import-export business-wise and so on. But we'll see how that one goes. That's based on fundamentals. We'll see how they can progress with that. A lot of things are happening in the world with the ongoing, still going over 1 year now, the war in Ukraine, Russia and Ukraine. And of course, so far so good, no sign of ceasefire from either party. But we watch as those ones unfold more. And we have other issues, geopolitical issues as well, with the likes of China, with tensions between China and Taiwan, also the likes of South Korea and North Korea. Things are happening in the world fundamentally, news-wise, that could make the market to react in volatile ways. So you need to always ensure that you protect your account accordingly, right? Because who knows, anything can happen, and that's why it's called breaking news. Breaking news is all of a sudden. So you need to be aware of all of these things in the market, right? So with that said, let's cross over to maybe one more instrument. Let's look at maybe one more instrument before we call it a day. We don't want to take too much of our time. And we look at the gold. Gold is inversely, it moves in the opposite direction to the dollar. But this dollar, we're looking forward to going down and then looking forward to buying at this area. That means that we should be looking forward to selling the gold much later. But this gold, if you look at it, I did this here, this boxing here to show you that we have been in a major range for now. We have been in a major range for now, but notwithstanding, we have like this area here as an area of supply. Remember for the, what's the name? For the dollar over here, let me just switch over to the dollar. For the dollar over here, we're looking forward to buying. That means that for gold, we're looking forward to selling. And we can map this area here, even inside of this major range. You can map this area here on the gold, where we're expecting that it should push higher, get to this area, look for your reaction. Don't forget the ART, look for reaction, and then your trigger based on maybe your bearish engulfing, and your bearish pin bar, bearish hammer to enter here to sell, and then to take it further down in this manner, right? So this is what we have for the gold. So we're going to be calling it a day over here. There are lots and lots of charts that you can look at and we can discuss at the end of the day, whether you are trading the majors or you're trading the minors or you're trading exotics or whatever the case might be, right? It's always good for us to look at it from the supply, demand, support, resistance point of view. That will help us to understand much better our areas of entry and of course our areas of exit, taking into consideration the risk to reward ratio. I repeat, taking into consideration the risk to reward ratio, right? So as we're paying attention to the charts now, make sure you are aware, right? If you are here watching live, make sure you pay attention to the news for the US dollar coming out in about 20 minutes from now so that you're not caught on the wrong side. It's always good when you can avoid unnecessary losses. And since you know that there's going to be high impact coming out soon, you can easily avoid unnecessary losses around that period, right? Very key, very important for us to take note of. Losses are bound to happen, but they should not be that major, that heavy, where we are crashing accounts or losing a big chunk of our account. And that is the first thing we need to do as a trader. I repeat, as a trader, the first thing we need to do is to protect our account accordingly, right? Protection, right? Because once you can protect, then gradually you start to grow your account. Just like soccer or football or whatever sports game it is, even if it is hockey, whatever the case may be. The first aim of any team is to protect the goalpost. Do not concede. Even if you're going to concede just a few, and then also that would help you to be able to, retaliate and score. Imagine if you're conceding about 5, 6, 7 goals every match. And that means that your goal is porous, your goalpost is porous, your defense is porous, your protection is porous, right? It's not up to par. So that's the first thing that we all need to know, we all need to understand, and we all need to work towards. So with that said, I want to say thank you. We've been doing the market analysis for today. This is the weekly market analysis. So you can join us same time tomorrow by 2 p.m. UK time. I repeat, join us same time tomorrow by 2 p.m. UK time, where we're going to be looking at the market using price action, majorly price action, which gives rise to the support, resistance, supply, demand, and where we look for opportunities in the market with the disclaimer that it is not a form of signal, but rather for educational purposes for you to learn at the end of the day, right? So I want to say thank you guys. Don't forget to watch the recording on the Trading Live platform. You can also watch the recording on the YouTube Live, on my YouTube channel rather. On the YouTube channel, you'll find me at CSA Forex. That's the name of my academy. You can also chat me up on Instagram. You'll find me at CSA Forex as well. C for cat, S for snake, A for ant, and then Forex, Forex. That is the handle for my Instagram and also for my YouTube channel. So do well to follow me. The other videos there, you can chit chat with me with maybe issues that you are having, and then we'll see what we can do for you. So thank you guys for joining. See you same time tomorrow. Trade safely, protect your account, and we'll discuss later as things unfold. Goodbye and cheers for now.